liquidity has become a real crisis.
Companies need to be larger before they go public. Companies need to be in business for a longer period of time before they go public. There are fewer and fewer companies going public every year, whether it's on our exchange, the New York Stock Exchange, or anybody else's.
Entrepreneurs used to take 5 to 7 years, build a big business, 30, 40 million in revenues, 3 or 4 million in profits, and then they could take it public and become liquid. Now, those entrepreneurs get to 30 or 40 million in revenues, and there are too many barriers for them. They have to keep their heads down for 5 or 6 more years in order to become a big liquid company. Their companies have to be $1 billion in market cap before anybody will take them public. So, XChange will allow those entrepreneurs to have sort of a springboard to an IPO.
Allowing companies to transfer shares in a way that has never been seen in the private market before, but has been seen in the public market, really creates this sort of super solution that we're looking for, and that's what Tim and I talked about in October of last year. And I said, Tim, this is a great idea. I think this is going to work.
Thomas Foley is the CEO, and he and I did a little brainstorming about what where his career would go, and what kinds of things he might want to be doing. And he had a few ideas for how to improve liquidity out there, and I had a few ideas for how to improve liquidity out there.
He came back and said, look, DFJ and all of our affiliates have 500 portfolio companies, and we think that 30 of them right now, really are that sort of tier above that should be getting liquidity. We should be getting our exits from. Whether it's an IPO or a trade sale, it's just not there. The market is plugged up. There's 84 pulled IPOs last year, and the valuations are so low that it doesn't really make sense for us to sell, but our LPs are coming back to us and saying, we have a problem. We've invested in these vintage funds for 10 years. So you figure out how to fix this.
So the two of us got together, and we brainstormed, and then we brought this idea to a lot of different parties. We brought it to some qualified institutional buyers, brought it to some investment bankers, and we've honed it down to where we think we have a product that will satisfy everybody.
Now, if you look at all of the amount of capital that's raised at an IPO level every year, it's around $7 billion. And if you look at everything before that, there's another $14 billion from the early stage to growth stage to late stage before that public spin-off. So that's somewhere between $21 to $28 billion worth of capital that can be moving through our system.
We think that the secondary markets are a fantastic entry into the entire financial and liquidity space.
The regulations have been built up so far that it's created this liquidity crisis. And I don't see those regulations getting any easier. I see them potentially even getting harder.
So we see this as a lifetime solution, where instead of deals being done by VCs or one-off deals, the VCs come to our platform and they invest through our platform. Every company raises their rounds through our platform all the way up to the public market stage.